Malaysia's asset management industry is in dire need of reform. Competition is savage, innovation is lacking, the costs are too high, which in turn hurt performance. The industry has got to change, and quickly. To get some clarity on the issues, I spoke to Rejina Rahim, the Managing Director of Nomura Asset Management in Malaysia. Rejina, thank you for joining us. Now, I understand the local asset management industry is facing tough times, margin erosion, savage competition. What are you guys doing to address these challenges?
Well, at Nomura, when we started 10 years ago, we've already started doing the client segmentations. So obviously within the license of the foreign fund management, we were only allowed to just look at institutional investment. So which means that we were only targeting institutional investors. So obviously, in that sense, we wanted to make sure that we were not dependent only just on one client base. So you'll see that compared to the other foreign players, we actually very much localized. So in terms of our product range, we actually have a concentration of Malaysian equities as well as Malaysian fixed income. So we're not actually just selling whatever Tokyo is asking us to sell.
Of course, when you mention the sole client, obviously you mean the pension fund, the local EPF, of course, and the competition meaning Amundi and Templeton being the other big foreign players. But when you talk about the challenges within the industry, we don't see the pools of assets under management growing on a year-on-year basis. I think the institutional side is not really growing and the retail side is not really growing. What are you guys doing to address it?
Well, what we've done is that we're not going after just the same type of clients as well, because I think too many of us in the industry are just solely dependent on one client base, which is unfair to that particular client for sure. So we've made sure that our product is also diversified enough to cater to the different corporates, for instance. So we have money market funds, etc., fixed income funds, and not just equity funds, and not just international equities, because obviously that's where our expertise lies.
Well, what is the story like for the young retail investor? Obviously he or she doesn't have much money in his EPF account to migrate to an assets firm. What should be the proposition for the younger investor?
Well, for the younger investors, actually, they're not actually catered for in Malaysia, in my honest opinion, because at the moment, what you'll see is that most of the industry is very much focused between 35 to the 45-year-olds, not to the younger millennials. And what you also see is that, unlike other different countries, most of the products available out there are actually very much focused towards people with money. So there's lack of education, and the entry fees are also very much catered towards the agency force and not for people to buy directly. So this has got to change, and for it to change, we also need to have different types of products, and this is where passive investing passive investment products would actually be very, very useful, and this is something that I think is actually currently missing. ETFs, for instance, there's only 8 ETFs, so that makes up about 1.3% of the total unit trust funds made available in this country. So this is something that needs to be addressed. But also, the reason why the take is actually very, very little is because people don't understand it, they're not aware of it, and the distribution is actually very much focused on the agency force.
To deal with the issue of transiting to a passive fund management style in a few minutes, but just to go back to what you talked about in terms of appealing to the younger crowd, not many people investing in education, as you say. Should the SC, the Securities Commission, take a more proactive role in forcing through the education process, as well as on the cost side, which at this current point in time is too expensive from an annual perspective for the young investor?
Well, I think, of course, the regulators have some role to play, but I don't think it should always be on the regulatory side. So, for instance, at Nomura, what we've done is that as part of our education process, we've actually just launched our Facebook page, Nomura Asset Management Malaysia, and part of it is that we started sort of dissecting what investment means. So for instance, one of the things that we had posted on our Facebook page was the fact that for 2.5 months worth of espressos that you buy, you could actually get a ticket to Korea. So,
but how does that play into your product portfolio? Because you are set up and you are currently licensed as an institutional investor. To go retail, you've got to jump through a few loops, right?
Yeah. That's right.
So what are you going to do?
Well, we are aware of the fact that the SC is actually very keen to actually change and disrupt the industry as well, because they're also very mindful of the fact that you know, the margins for a lot of the retail players is very high, but that's not translating you know, the benefit to the end client. So you know, we know that the digital license will be coming out, so we're hoping that you know, that would also change the industry and you know, benefit the end client.
Would you stump up the cash and, you know, push up your paid up capital to move into the retail side of the business potentially?
Definitely, we're looking into this. We're examining. We're actually doing a lot of market intelligence to actually focus on the possibility of doing this.
On the institutional side, as well as on the high net worth side, maybe you know, well catered for now. But where are the growth avenues in those two areas?
I think in terms of high net worth, there's definitely a lack of you know, good service here, because a lot of the private banks in Malaysia tend to be very much focused on broking services rather than actually providing the full suite of private banking that a lot of high net worth clients are actually used to in the region. So which is why a lot of them would go to other markets like Singapore, for instance. So you know, in order for us to do that, you know, a lot of people talk about Islamic as being the niche for Malaysia. But again, the product offering is not catching up with that national agenda.
Rejina, when you talk about the issue of the retail investor and some of the challenges that they're facing, I think one of the concerns is the market performance or lack thereof. And I think maybe it's because of the agency workforce taking too many of the returns for themselves and leaving too little meat on the table for the investors. Is that true? And what should the industry do to address it?
Well, definitely from my personal perspective, I reckon that the agents are taking the lion's share of all the profits. You know, unlike other neighboring countries, our main distribution is actually through agents in the industry here locally. So, which is why it makes it very difficult for foreign fund managers to also come in, because obviously we can't just build an agency force overnight. And that's why the strong players within the industry are the ones who actually have an agency force. For us to do that, I reckon digital platforms are actually the way to go.
We've really got in the form of fund supermarts and iMoney, you know, growing platforms. But what about you guys? How should you do it?
Well, you know, we're very keen to see how the regulators come out with this new license of theirs. So if it actually addresses the ability to go you know, fully digital, that will be very much welcome, because then we can actually you know, directly access the retailers and actually be more transparent in terms of the fees that we charge, what's actually being invested for the end client. Because right now, a lot of people are not aware that they're charged upfront fees as well as back end fees, and so there's no room to actually make money.